The hearing of the Committee on Financial Services will come to order. This is the first in a series of hearings we will be having on hedge funds and systemic risk in the financial markets. I do want to make a point that may encounter some skepticism, but it will not be the first time I have encountered skepticism. Sometimes congressional committees have hearings because they want to find things out. I acknowledge that that is not the normal reason for having hearings. Usually we have hearings to make a point, to embarrass somebody, to reinforce a position, but there are times when there is a genuine acknowledgement on our part that we need to know more about things. We are now going to have a series of hearings on the linked topics of hedge funds, private equity, and the role of derivatives. Those are conceptually separate things. They get merged. One of the things I hope we will do as a result of these hearings is to help people understand that those are not all the same thing, and we will unbundle conceptually some issues. We will have 2 hearings with people from the private sector. The last hearing we are currently scheduled to have in this series will be with the members of the Presidential Working Group. We thought it made sense, they having made their report, to then have some discussion of that, and then have them come back and respond on the conversation. We will, at that point, too, be talking to some of the regulators, particularly in the bank area, who are given certain responsibilities under the approach of the President's Working Group. I have just some preliminary comments to make here. First, I believe there is strong support on the committee. It may not be unanimous, and people can obviously speak for themselves, for the efforts the SEC has recently made in the area of investor protection. Among things we want to sort out is the question of investor protection versus the question of systemic risk. This hearing says hedge funds and systemic risk, not because we are assuming that there is a systemic risk, but because that's the question we intend to look at. This hearing is not going to be, this series of hearings is not going to be primarily about investor protection. The SEC has moved in that direction, I think, with some appropriateness. There is one subset of the investor protection issue, though, that we do plan to look at, and that's the interaction between pension funds and the hedge funds. And that one is not entirely within our jurisdiction. In fact, that became an issue last year when the pension bill was being voted, and that bill, of course, did not come to our committee at all, I believe, certainly not in any major way. There was interest in that in the Education and Labor Committee, which has jurisdiction over ERISA, and the Ways and Means Committee. Now, I will confess, and I've asked people to be looking into this, one of the concerns is the extent to which public pension funds get involved in hedge funds. Wasn't clear to any of us who exactly had jurisdiction over public pension funds. That may become an issue now because you have some of the states concerned about their GASB's requirements regarding the accounting. But there is some concern about public pension funds and hedge funds. Once you have that concern, it is, of course, even if you had it, it's not clear if you are going to put any protections in there, restrictions, on whom do they go? Do they go on the fund which receives the investments? Do they go on the investor? These are all the questions that we will be looking at. I will say, from the systemic risk standpoint, it does seem to me that the form in which investments are made is less important by far than the type of investments. And in particular, I think it is time for us to look into the question of derivatives. Now, I said that sometimes members of Congress have hearings to try to find things out, and not because there is a strong position. I am very proud of the level of discussion that goes on in this committee. In fact, I think if people had been at the markup we recently had on the question of how to respond to the hurricane, they would have been very impressed with the degree of knowledge. I am not prepared to argue that if we got into a serious discussion of derivatives, that we would dazzle anybody with the depth of our knowledge and understanding. I have previously expressed the view, particularly with regard to accounting for derivatives, when that's become an issue from time to time with Fannie Mae or elsewhere, that the current state of that appeared to me to be somewhere between alchemy and astrology. I undoubtedly do a lot of people an injustice when I say that, and I am prepared to be further educated. So I just want to stress again, these are hearings that we are going to have because there is a new development in the American financial world, to some extent, the hedge funds. There is also private equity. I should have added, and I asked for just 30 more seconds. With regard to private equity, the concern here is not so much systemic risk as what the social implications are. In fact, our colleague who's not here from Florida, Mr. Feeney, commented the other day when we were having the executive compensation hearing that he worries about people going private because constituents that he represents could lose the opportunity to make good investments. That was an issue that the gentleman from Florida raised in terms of the implications of private equity. Many of us are also very concerned about the implications for private equity on the workers, on employers. If you have, in fact, an increase in debt and the takeover of companies, what's the impact short-term, long-term? Those are the questions that we want to look at. And as I said, I personally have no preconceptions about this. Indeed, to be honest, in some cases I barely have conceptions, much less preconceptions. It is a very important set of questions, and it is the job of this committee to help, I think, both ourselves and our colleagues in Congress, and indeed many in the country, to understand it. The gentleman from Alabama is now recognized for 5 minutes.